Well, hello, we're back again for another in our series of Meet the Managers. I'm very pleased to have today Warren Rogers from Downing. Downing have two goes at this because they have another video if you want to check out on the website where they talk about one of their other funds. But Warren, do you want to introduce yourself? Tell us a bit about Downing. Tell us a bit about the fund that you're involved with.
Sure. Yeah, my name is Warren Rogers. I've got the pleasure of leading the team here at Downing Ventures. We've got a strong team of 14 based in London with, we have venture partners, which are, contracted individuals who work with us in Tel Aviv, Boston, Seattle, and Palo Alto. We are a thematically focused venture capital fund. So we don't do private equity. We don't do growth equity. We do venture capital. We focus on we're a multi-stage investor, means we look at Series A, Series B, Series C. Most of our investing is in the earlier stages, Series A to C. However, from time to time, we invest in later stages to provide some kind of portfolio balance, as we call it. Being thematic investors means we focus, on long-running, well-entrenched themes and what investments support those. So an example would be the cloud is everywhere all the time. It's everything to business. What are the next chapters of the cloud? What are the next evolutions? What are the next sets of technology that's going to support and accelerate? So in that regard, we only focus on what's called enterprise, which is what I say, anything to do with business. So business to business, B2B, as they say, software, cloud again, and deep tech, which is the worst term in the world to describe a sector. And really all that means is the application of science and engineering to solve technological problems. The way we look at deep tech, though, is we don't take the risk, does it work? Like, is this some big belly flop? We take the risk, does it scale? Right? So, it's not going to be somebody comes with a great idea and it's like, okay, I need $100 million to see if it works. We're the wrong partner for you. But when you figure it out, we want to be engaged in figuring out how to scale it. And then the final sector that we're engaged in is healthcare, which I say that's the most diverse because we have a very, very strong team, very, very smart individuals, much better educated than myself in the sciences, who look at everything from digital health, applying AI and software in medicine to drug discovery, imaging, diagnostics, and so on and so forth. We've been investing in EIS since 2008. We have a long track record here. I think we have very, very good performance in our peer group and on its own. And I think that as we get into it, our message is quite a bit different what we're providing investors with.
Right. Okay, that's a great introduction. And already you've covered off a couple of things I wanted to cover with you there. You've explained what deep tech are and enterprise and healthcare, because one of the things we're trying to do in this series is explain things. We're great at having acronyms and clever words in our industry, but I think sometimes it's good to just step back and explain them.
It's very confusing, right?
Because yeah, exactly.
It loses people in these terms. And if I hear new ones all the time that I have to ask, what the heck are you talking about? So
exactly. So yeah, I say part of this series is just trying to explain these things. And one of the ones I wanted to explain that you mentioned right at the start, and this is probably a little bit 101, but you mentioned venture capital, you mentioned private equity. What's the difference in your
yeah, so I've got some funny ad libs I could say, but the real difference is the first stages of a company's growth are what I would call venture capital. It's I have an idea, I have a team, I've got a market, I need to build it to bring it to market to scale it. Private equity would come later as maybe an exit. Private equity is generally growth investors. Okay, you've got a product, you've got your market identified, you've got revenue, you're far more of a substantial organization. We can provide that capital and that propulsion, to whatever the next level. And generally, another thing that I say is, one of the bigger differences that, private equity is very much about control, because they typically buy, there's all different kinds of private equity, but a lot of them buy a lot of control. And in venture capital, we're very much investing in people first, or, people, technology. So, you buy 20%, 10% of the company, clearly minority investor, and you're giving them the tools needed to build that scale to have that private equity exit if that was the case.
Sure. So the venture capital is your earliest stage investment.
Yeah.
And I guess the funding escalator, as I call it, matches the growth of the company. So you have
Yeah.
the early stages, that's where EIS and SEIS probably plays. And then as you move up, as the company grows, and as obviously you start to hit revenue targets and profit targets, that's when you move to kind of PE and really starting to scale up the company and looking at IPOing or exits
Yes,
or
yeah,
moving on to the next
precisely.
stage.
Yeah.
Okay, brilliant. I solved that one. Thank you very much. The other one I was going to pick you up on, you mentioned the global team and kind of I think you mentioned Palo Alto and a couple of other places as well. I guess that sounds a little bit different from some other funds, which are obviously
Sure.
UK dominated. So do you want to explain a bit more about that?
Yeah, totally. So I have nothing but respect for my competition. And I think that the good thing about being in ventures is it's for creative people. And I think so our take on competition in the market is that, technology does not respect borders. It's not restricted to a specific area. It's not specific to a very, very specific region. And then if you put our views on investing, how we're only interested in what I call global value propositions or, law of big numbers. So, an example very quickly would be, a company that did medical records technology, efficiency for the NHS, which is a worthwhile cause, very, very good thing, but it's a very, very small market. Everything we look at is, global proposition. So the second thing is that to find good technologies and good founders, those lie all across the globe. And to have an idea of what are these technologies, what is happening in Palo Alto, what's happening in Tel Aviv, gives us an idea of what also to look for here. That's one. And then two is that subject matter expertise is global. And so, UK is, one of the reasons I live here as a Texan is because your school system, the university system are so excellent. And you have so many smart brains here. And, however, all over the world, there's very, very smart people. And we have the access points to pull them in as subject matter expertise to perform better diligence, better thematic work, better understanding. And then I think the last point of like how we tie all this together is that what we've thought is, all our companies are clearly based in the UK. However, they have global aspirations. And so like I said, global value proposition, they want to reach other markets. We can help them do that because we have these people in different spots. Like in Boston, we have our healthcare specialist who, works to try to tie in companies there. And Tel Aviv, works very much in deep tech, as does in Palo Alto. So we try to think about what is the right proposition, the value proposition for that founder, right? And what really attracts strong, deal flow, strong founders, and then what do our investors, what's really going to matter to them to really monetize their exit? We like to think about how do we get out of this as soon as we get into it, and not in a bad way, but it's more like, well, if you invest in a small market, your exit will be in a small market. If you invest in a big market, you're going to have all these things. And so the whole time we're invested, we're trying to connect them with others well outside of the country and to try to, really accelerate what they're doing from day one. And I think the investors, they get a better return profile because there's more eyes looking at it and more investors.
Yeah, sure. And I managed to go, I think, 10 minutes up mentioning COVID, but with COVID having hit, and obviously here, and obviously with Brexit as well, that global approach that you take, has that made that easier? Or has that kind of accelerated what's happening already? Or
in a lot of ways, it's made, so COVID in itself, it's like, as you said, made in 10 minutes. I mean, it's like my least favorite thing in the universe to talk about because like everybody else, I'm like, I want, my life back. But the upsides for the business, were it's far more efficient to work like this now. And we're able to reach people, there's 160 hours in a week. We can talk to people in California and Israel, Europe, pretty quick. And the work from home environment and the lack of, in-person meetings in this makes a big focus on data analysis, like really, really getting under the hood on things, really understanding. I mean, Downing Ventures is slow to get married. We do a lot longer deal review. We want to get to know a company really well. This COVID time has helped accelerate that and provided, a good backdrop of just very patient investing. Brexit, in my view, is like, I believe it was bad actor sabotage that it got done, in the first place. And I think that it's going to have, you look, like any divorce, there's a lot of unintended consequences. And, I don't believe anybody, is truthful when they tell you they know what those things are yet. But the way that we look at this is, okay, what's that take from us? Well, unfortunately, it took a lot of government funding away, right? Because, government funds in Europe would invest here, companies could access funding, could go there. And, it provided a lot of different routes to their growth. Well, now it's really, we have to be far more discerning in the investments we make, have to try to work in better partnership with university systems, government agencies like the British Business Bank, for example, or maybe the European Space Agency, UK Space, just as examples of bodies that are in the UK trying to continue to accelerate tech, because the fact is we lost a lot in this. And I know that the government controlled press wants to have it watered down and make it look like nothing ever happened. But, we don't know how it'll be. So our action is to be proactive, to try to identify, to fill the gaps that may arise.
Sure. And just going back to the three things that you mentioned earlier, so deep tech and enterprise and health, I'm guessing health is fairly healthy at the moment.
This long-running trend of people being obsessed with living, continues to accelerate.
Who'd have thought that would catch on, right? But I guess that's quite a healthy sector in terms of investment and getting money at the moment. How's enterprise and deep tech faring? Is it
the one thing that the unintended consequences can be positive sometimes. And I think, look, there has been a long run theme that the cloud is the main center point of business. But COVID, putting everyone at home, just think about it in a microcosm, if you would. That's actually quite large. If you looked at the UK government and you took all of the employees in the MOD, for example, and you put them at home, and you look at the strain on the computing infrastructure, how many more servers do you need? What is the software that ties the servers together? How are they going to develop apps? How are they going to do any number of things? Well, it proved that cloud is king. And that, the positive knock-ons of this is that, the cloud was growing at what we call a CAGR, compound annual growth rate of about 13% a year. I mean, I'm gambling. I think that that's going to be about 20% now, because, businesses have seen that this will happen, which accelerated another theme, is that the cost of doing business has dropped significantly. And, look, people thought WeWork was a cute place for people to hang out and work on their one-man bands. Yep. Well, what it really was the thematic shift to decentralized work. And that makes a lot of sense. Look, you will always follow what the biggest companies do. Facebook, Google, Apple, etc., have said, never come back to work. You can work from wherever you are. There's going to be, a variety of hot desking and interim meetings and things like that. But for enterprise, this has done everything. It's accelerated the cloud, software, everything is going to be decentralized, which creates the deep tech example, that things that tie in what we call disaggregated computing. Let's just look at it like this. Many different servers that power what we're talking about right now, located in many different areas, many different agencies, tying those together, being able to access data from different sets at once. But then, what COVID also did is, look, it unfortunately shed light on the fact that within governments, the only parties to receive significant money were, the defense, intelligence, and bodies like that. They got the shiny new supercomputers, the big AI stacks, and all this stuff, where ministries of health, CDC in the US, they were running older computers. And what happened is that there was not a significant proliferation of applied intelligence and data analysis in those companies. That is seeing remarkable investment now, because we realize it's not there. And this saves lives. If they would have had this opportunity much quicker, if it was far more ingrained, I think we would have come to a vaccine or a virus path, or, really an understanding much, much sooner. And I think that, these things have become their trends in themselves, at this point.
You talked about the themes there, but the companies themselves, how are they held up? And are there exciting new companies that you're coming across if you are looking to invest kind of over the next 2 or 3 months or so?
Yeah, so it's kind of interesting that when I was lucky enough to take over the business here and take over the team in terms of kind of creating a leadership back, it was we never want to be reactive investors, meaning like a deal comes in, look at a deal, do a deal. We want to be proactive. And so what I said is, look, in these three sectors we've identified collaboratively that offer the biggest payouts, that have the best risk reward, the biggest markets. There's themes in all of them. There's sub-themes, sub-themes. Well, you need to build, I told the team, build top companies maps, category leaders, and proactively reach out. Your job in venture capital, people wonder, but it's really sales. And, all day long, myself or my team is calling companies proactively, learning about them, seeing where they fit. And we have uncovered, very many, significant things. I'm very proud to say that in 2020, I mean, Downing led or co-led the top transactions in material and hardware, some of the best software transactions. But more importantly, because of this proactive approach and the quality of what we're investing in, we're investing with the top Silicon Valley firms, I don't want to say no other, but I know for a fact not many of my competitors can say, that we're consistently transacting with names that, were idolized by many founders. And that's created a lot of investor benefit, because investing with better parties and better transactions usually equals better results. There's nothing guaranteed, but the quality of opportunity with the quality of investor, you're a little bit better set to make money. So it's been very, very exciting. And I think it's, the returns will start percolating here as things, unfortunately it takes time, right?
Yeah, I guess that's always the play, isn't it? That it
Yeah.
takes time for the winners to come through. But in terms of those winners, are you starting to see a couple of kind of winners come through
Yeah. I
now? Are
mean,
there, what's
it's remarkable, right? Because I think that everybody knows going into venture capital that it takes time, but everyone forgets once they've invested, because as a year goes on, another year goes on.
yeah, the lemon's
And
ripened before the plums, right? So
yeah, exactly. You're thinking, well, where's the update? What's happened? The price hasn't changed. Unfortunately, it's not the way it works really. And so what we have is that we have some of our earlier investments, a wonderful company called Touchlight, which does RNA vaccine development, which is obviously key to COVID. If
yeah,
anybody,
yeah,
and through COVID, I learned more about biotech than I ever wanted to know, but they're central to, discovering of vaccines because they produce synthetic DNA, which is very, very difficult to produce.
yeah.
And, we invest in that company in the very early stages. And I'm very pleased to say that, they have grown, significantly. There'll be some public information on the exact value released soon, but it's, many multiples of where we invested. We're also looking at, things like a company called Glisser, which does, it's right time, right place. They focused on online events, online, conferences, and they also have a hybrid model. So when and if things go back to the way they were, they're in a good spot. But it's a good example in that case of scaling them to the US. We were able to collaboratively add value at the board level, with significant players and names from the US and get them to the United States where they can grow much more quickly right now. So we were able to take advantage of, both our infrastructure and the opportunity set. Other, really exciting things that we're very impressed with is like, we're very proud to be an investor in a company called Parsable, which, the easiest way to say what they do is they take manual work and create digital standard operating procedures. So everything from if your job to feed your family is cleaning the restroom at Starbucks, they, instead of a paper, a clipboard, they automate this on a mobile phone, on a tablet. But if you operate a nuclear power reactor or a, coal crusher or any of these things, helping improve safety and, quality of work and performance. In COVID, many people forgot the frontline workers weren't just doctors and medics, but the people who every single day they put on their uniform, put on their work boots, grabbed their lunch and went to work at the meatpacking plant. They went to work at the packaging plant where they make the cardboard boxes, the farmers and everyone and the bus drivers and all these people had all of a sudden they have all their standard operating procedures, but now there was no written safety procedures. It was just another piece of paper, it got lost, it wasn't ingrained, but now having it digitized and keeping your workers safe this way, this is, one of the best, ESG stories, one of the best, doing the right thing for people investments we've ever seen. And it's incredibly exciting to be an investor there now because they were always doing well, but COVID and this horrible time has, created the tailwinds now for the next years of growth.
Yeah, I couldn't help but laugh when you mentioned nuclear workers. All I had a picture in my head was Homer Simpson trying to.
Yeah, well, me too, right?
Yeah, it sounds exactly like he would have needed something like that,
Yeah.
an app on his
Probably
phone.
no donuts, but
Yeah, exactly. But Warren, thanks so much. It's great to hear some of the companies and examples that are in the portfolio at the moment. Particularly, I think you mentioned Glitter there, because again, my mind immediately jumped to Hopin, and obviously that's gone from zero to £1 billion valuation in 2 or 3 years. So the examples or the kind of the template is there to be able to follow that. So it sounds like you've got some great companies in the portfolio. And thank you very much for the last 10, 15, 20 minutes or so. It's been a great interview. So as I say, if you want to watch the other Downing video, please check back to the website and you can watch that one when that's up and running as well. But Warren, thank you very much for your time and input.
Thank you so much. I enjoyed being here.
Take care.